Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario on the weekly time frame, where we're looking for a 5-wave impulsive structure to the upside, where preferably your wave 4 is not yet finished and you continue this range. The common target for your wave 4 is between the 236 and the 05 Fibonacci, taken from the low of 2 to the high of 3, giving you a target between 62.3k and 49.3k. The invalidation is the 0.618 at 43.5k. Preferably this wave 4 is ending after the 0.382 sitting on the 6th of May. The low that we have made over here was 1 week earlier, so therefore preferably we continue this range sideways. Also, wave 4 is commonly longer in time than wave 2. However, the rule of alternation does say that if wave 2 is long in time, wave 4 has a higher probability of being short in time, so it might finish before the 1-to-1 fib time, taken from the start to the end of 2 to the end of 3, comparing 2 with 4, sitting on the 12th of August. One of the two scenarios that could lead to a continuation of this range is a zigzag in a wave A, B, and a wave C. Wave A here is a leading diagonal structure, a 5-wave move to the downside, followed by a wave B 3-wave corrective structure reaching the 886 Fibonacci, taken from the start to the end of wave A, which is a common target for wave B. And then we're looking for a wave C to the downside, which has to be an impulsive structure in a wave 1, 2, 3, 4, 5, where preferably your wave 3 is reaching the 1.618 trend-based wave extension, taken from the start to the end of 1 to the end of wave 2. Now the reason that I put my wave 1 down here and my 2 up there, so wave 1 at 61.4k and 2 at about 69k, is because of the volume profile of this range. We are currently testing the point of control after moving outside of the range and coming back in. Losing and retesting the point of control here increases the probabilities to move to the downside to the value area low, which is sitting at about 61.4k. If we find support there, we could finish a potential wave 1, move to the upside for wave 2 back to the value area high, and then move to the downside in a wave 3 to lower prices. The second scenario that can lead to a continuation of this range is a WXY sideways double combo with a regular flat in wave W, an expanding flat in wave X, and then most commonly you're looking for a zigzag in a wave Y, but wave Y can also be a flat structure or a triangle, but that is less common. The common target area for your wave Y is between the 0.618 and the 1.236 trend-based fib extension, taken from the start to the end of W to the end of X, giving you a target between 63.2k and 54.3k. The 1.618 is an extension target and is uncommon at 48.9k. In this scenario, we are then looking for a lower time frame impulse to the downside to then get a corrective structure in B and a final impulse to the downside in a wave C. In both the daily bearish scenarios, you want to count an impulse to the downside, because in a wave C, we're looking for a bigger wave 1, 2, and then continuation down in a wave 3, and in a wave Y, we're looking for a wave A, B, and a wave C. Here we then have our wave 1, 2, looking for 3, 4, and eventually a 5. The invalidation for this scenario is the 0.618 at 69.1k, taken from the end of 2 to the low that we have over here. The moment you hit the 0.618, it increases probabilities that this is a corrective structure, which increases the probabilities for more bullish scenarios. Talking about bullish scenarios, on the weekly time frame, we're then looking for a bigger 5-wave structure to the upside, with inside the yellow wave 3 a lower degree green impulse 1, 2, 3, 4, 5, where potentially that wave 4 is finished and we're working on a wave 5 towards the upside. The common target for your wave 4 is the 382 to the 05, taken from the low of 2 to the high of 3, giving you a target between 57.5k and 53.3k. The invalidation is at a 49.3k, which is the 0.618. If the low is in and we are looking for bullish continuation, we want to count an impulsive structure to the upside in 5 ways. Currently looking for this wave 4 between the 382 and the 05 Fibonacci, taken from the low of 2 to the high of 3, giving you a target between 67.5k and 66k. Preferably this wave 4 is longer in time than wave 2. The vertical line on the chart is a fib time taken from the start to the end of 2 to the end of wave 3, comparing wave 2 with wave 4, and preferably this wave 4 ends after the 1-to-1, which is sitting on Saturday the 25th of May, 10 AM Central European Time. Seeing where price is at the moment, it means that preferably price is going to move sideways instead of to the downside, because we are currently testing support, but we have tested all of the support that I have in this box over here. Taking out this low would increase the probabilities to invalidate this bullish scenario. Now, if this would be the end of your wave 4 and you look for impulsive continuation to the upside, we have to count this move to the upside as a wave 1, this as a wave 2, and we want to see continuation up in a wave 3. The common target for your wave 2 is between the 618 and the 786, taken from the low to the high of wave 1, giving you a target between 67k and 66.7k. The 886 is a very rare target for 2. Hitting the 886 will increase probabilities to sooner or later take the low, with the 886 sitting at 66.5k. Now, as you can see, this wave 2 is currently 10 times longer than wave 1. The red line on the chart is a fib time taken from the start to the end of wave 1, comparing wave 1 with wave 2. The most common target for a wave 2 time-wise is between the 382 fib time and the 3 fib time. We are currently here making a low at the 10 fib time, which is very rare for a wave 2, lowering the probabilities that this is a start of an impulse to the upside. If price does move towards the upside, the probabilities are higher that this is a wave A, B, and a wave C corrective structure, which then also increases the probabilities to sooner or later take this low. On a weekly time frame, we also have an interesting channel that is very nicely respected on the logarithmic chart. Channel is taken from the low to the low at 24k to the first time touching 30k. And what you can see is price moved to the upside, hit the upper trend line, hit the midline, then eventually broke out, little bit of a weekly order block here before moving to the upside and now retesting the upper trend line. Failing to hold this trend line increases the probabilities to move to the midline of this channel. Looking at the CVD divergences, we do have a bullish CVD divergence on the chart, higher low in price, lower low on the CVD. However, when you zoom in to the 3-minute and you observe this structure to the downside here, you will see that price has been creating bearish CVD divergences as price has been moving towards the downside. For this bullish CVD to have any chance of playing out, we need to first of all invalidate bearish CVD divergences and make sure to not create any new ones. Just to show you on the chart what it looks like at the moment, if you go to a 15-minute time frame, everything looks bullish. Higher low on price, lower low on the CVDs. If you then go to a 3-minute time frame and you zoom in, then what you'll see over here is lower highs on price, higher high on the CVD. That is the first one that was visible, and the most recent one was over here. Lower high on price, but again a higher high on the CVD. It is very small, but it is there, so I continue to observe the 3-minute CVD divergences. And if we then finally look at the probabilities of the different scenarios, I like to keep it very simple. The probabilities are simply higher to move lower as long as the 618 isn't hit to invalidate a wave 4, and the 618 is currently sitting at 69.1k. As long as price doesn't find the strength to build a bigger range or gives a bounce that could change probabilities locally, we look for price to move down. If we look at this bounce locally and we want to count this impulsively in a 1, 2 and then a 3 to the upside, your wave 2 is 10 times longer in time compared to your wave 1, which is very rare, and we also see a 3-minute bearish CVD divergences. So at the moment the probabilities aren't that great for very bullish continuation. We are currently at support, however, so for further downside we have to lose the support. Currently at this white box here, sitting between 66.1k and 67.1k, and we have a blue box below 65.1 to 65.3 as additional support, and then we have 62.9 to 63k. The area of resistance above price at the moment is this white box here between 68.5 and 68.8k. Not hitting the 618 increases the probabilities for the bearish scenarios on all of the time frames. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.